Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video analysis. In terms of equity market news flow, it is relatively a quiet day because not much is happening, and of course it wasn't really expected to, because the market reaction that we have seen yesterday was incredibly enormous in terms of its magnitude of that upward momentum that we've experienced. The Nasdaq index, as you can see in the chart, made another record high. And if you shift the gear and start looking at the S&P 500 stocks, you can see a similar momentum there as well. In fact, if you actually just gauge the momentum of the S&P 5 stocks with respect to the Nasdaq, what you can see is that the S&P 500 stocks have performed much better than the actual Nasdaq, or say the tech-savvy index. Now, of course, there is a reason behind it, because during the coronavirus sell-off, it was the Nasdaq index where we didn't see that sort of a brutal losses or the brutal price action, because the S&P 500 index, remember, and if you don't, please do go back and watch our previous videos. It was the S&P 500 index that dropped well below the 200-week moving average, while the Nasdaq stayed well above that, or it just briefly crossed and then it just bounced back up. And the reaction, the bounce back reaction for the Nasdaq was a lot more stronger. But now it is a time for the S&P 500 stocks, and of course for the Dow Jones Industrial Average as well. We're seeing massive momentum in both of these indices as well. But yes, it is true that as of today, we are seeing the equity markets somewhat flat. In fact, the Dow Jones Industrial, as you can see in the chart, is down by over 150 points. But again, this abysmal price action isn't really calling for any sort of a major qualm around this price action. I think the market, the momentum is still very much strong, and it is likely for the prices to continue their journey upward. And this is because enormous amount of money is still parked on the sidelines, and there is this mammoth amount of a fear of missing out among traders. So once that capital is deployed, I think it is only a matter of a time before the Dow Jones Industrial raises all of its losses, though I'm speaking of those losses, the coronavirus related losses especially, and the only target which is left for the S&P 500 index now is to cross its all-time high. Now, shifting the gear and then moving into the safe haven assets space, and I'm specifically talking about the gold price. Yesterday, the price action stayed below that critical resistance level of 1700, and as long as the price doesn't cross above that 1700, I think the price action, the bullish price action, is highly likely to remain muted. But with the Federal Reserve meeting taking place today and the conclusion tomorrow, I think it is likely that we may see another surge for the gold prices, because the dollar index is likely to continue to face dismal price action in the coming days. Why? Because the Federal Reserve is expected to keep its monetary policy stance. Of course, I'm not anticipating for the Federal Reserve to lower the interest rate tomorrow, but the extra dovish language is going to be there. That's all for today, folks. See you guys tomorrow.